There is one thing that destroys stock trader performance more than any other. This week, I'm going to show you what that is. Plus, I'll do my regular weekly market analysis. We will do the day trade of the week on ETTX and go in search of opportunities with the Stockscores market scan. In life, fear destroys performance more than any other thing. If you are afraid of crashing on a mountain bike, let's say, you're probably going to crash. And in trading, fear is one thing that really hinders performance as well. However, it's not what you think it is. It's actually the fear of missing out on an opportunity. It causes us to take trades that we would not normally take when we have a rational mind. It causes us to see things that maybe aren't really there. And when we analyze our losing trades after the fact, we will often wonder or ask ourselves, why did we take that trade at that time? Well, it was probably the fear of missing out. You see, it puts our focus on what might happen instead of what will probably happen. Now, trading the stock market is a probability game. You're not going to be right all of the time, but you do need to put the odds in your favor. And when you start taking trades that really don't meet your rules or don't have the greatest of potential, simply because you are afraid of missing out on what might happen, you'll end up hurting yourself a lot. So make sure that you have a well-documented plan, maybe even a checklist, having a checklist to go through things step by step by step to see what is this trade and is it really worth taking. And if you do that, hopefully you can avoid the most destructive thing in trading, the fear of missing out. All right, well, let's get into this week's market analysis. And as I always do, we'll start off with the US markets, the S&P 500. And we had a little bit of weakness this week, and it shows up on the chart here when we take a look at the 30-day, 60-minute chart. You can see that this little upward trend line was broken on Wednesday, and we've been sort of trending lower ever since. Now, in the bigger picture, this trend line is still intact. Essentially, we ran away from the trend line and we've pulled back. So it's not a real negative signal yet, but it is something worth watching. We did bounce off of the trend line at the end of the day on Friday, so hopefully we will continue that bounce early next week. However, if we start to break down through this trend line, through the, call it 363 level on the SPY, then you may see some more weakness. The next level of support is horizontal support here at 355. Moving along to the longer term chart, you can see that the upward trend there is still well in place. I can draw a line across the bottoms and a line across the tops. That is our upward sloping channel. And we meandered with quite a bit of volatility in the fall. Typically the fall is the weakest time for the market, and then the markets get going in November, typically until May. And we can see that we did have a decent November, and we simply had a little bit of weakness last week. Could be some short-term profit taking. As long as this upward trend line isn't broken, I remain long-term bullish on the market. Looking at the NASDAQ 100, again, you see that little bit of weakness on Wednesday on the daily chart, but in the context of where support is with trend lines, we really haven't broken down yet. We're maybe threatening some short-term lines, but there's no real major cause for concern. Just maybe have a little bit of caution going forward. Looking at the Russell 2000, it really shows where the strength has been in the market through November and into December. We've had a nice upward trend in the small caps, and that really hasn't been broken yet, even though we had a little bit of weakness at the end of the week or midweek last week. The optimism is still there, and it makes for a good trading market. The retail investor, there's millions more of them in the market right now, and they're chasing after these lower price stocks, pushing them higher, often in irrational ways. But hey, I've made lots of money from irrational moves, and we shouldn't discount them just because they don't make any sense. If the stock goes up after you own it, then you should be happy. All right, moving along to the Canadian markets. And here is the TSX 60. And again, just a little bit of weakness this past week, but in the grand scheme of things, we're not really breaking any upward trend lines just yet. We are building some falling tops, so a little bit of caution is warranted. If we break down, we may retest the lows from early December. The longer term chart, you can see the the TSX is rallying into resistance at the all-time highs, and that's why I have a neutral rating on the TSX, because I think another week or two of upside, and then we're going to hit that resistance level where we should expect the market to get stuck. Now in the small cap market, some decent moves to the upside the last little while. Again, the small caps attracting that retail investor, which have come back to the market during the COVID pandemic. Perhaps they have nothing better to do but trade the stock market. And all of that volatility, all of that action, all of that liquidity in the market is making for the trading of small caps and micro caps that much better. On to currencies. And here we can see the US dollar has really been getting beat up since the early summer when this first upward trend line was broken. We've been in a downward trend ever since. And until that downward trend is broken from a rising bottom, we'd have to see a break to the upside from a rising bottom. I am bearish on the US dollar. Now, the Canadian dollar, as a result, is going up. It tends to be opposite of the US dollar. And you can see that we have broken through some resistance on the Canadian dollar 2 weeks ago. A lot of that motivated by strength in oil. Of course, the Canadian economy heavily dependent upon oil. And the price of oil has been inching up. We'll look at that chart in just a moment, and I think that's helping the Canadian dollar as well. On to commodities. Here's the gold chart, and despite the fact that the US dollar has been weak, the price of gold has not really been strong. Typically, they move in opposite directions, but the price of gold has been moving down while the US dollar has been moving down, and that's a bit of a conundrum. I think that there was an expectation there would be much more printing of money perhaps, and that would help gold. It hasn't. And although we have been weak for the last few months, we are now at support at the upward trend line. We bounced off of it 2 weeks ago. Until we can break this pullback line, which is essentially the 4-month downward trend, I wouldn't get too optimistic about gold. If we were to break the upward trend line to the downside, then I would get more concerned about gold. So for now, it's kind of a neutral situation as the gold market fights to hold support at the upward trend line. Now, I said that oil has shown a bit of strength in recent weeks, and that is the case that you can see right here on this weekly chart of oil. It has broken through highs really going back to February, March, when the gold price, or pardon me, the oil price really broke down with COVID. Well, now we're building rising bottoms. We're getting some stability, and we're starting to move up from this. And I think oil is going to slowly recover back into this trading range here. And that should help some of the energy names. I notice when I do market scans on Stockscores, I am seeing more strength in some of those energy stocks. And so that may be a place to play in the near term. I think you still want to be pretty cautious. A lot of those charts don't look great, but there are some that are coming up. And when they do and they have good patterns, then it's worth considering them because of the improvement in oil. Onto the fear chart. And of course, this is the volatility index based on the implied volatility in the S&P 500 short-term futures contracts. Essentially, when there's concern about future volatility, this goes up. And you can see that we had a little bit of an uptick in the last 3 days with a little bit of market weakness. However, we are far from really making a strong move in volatility. And so I think this is just a little bit of caution warranted with this on the stock market, but nothing significant just yet. So my ratings then on US stocks, bullish on both time frames. Canadian, I'm going to put neutral long-term because of that long-term resistance, and bullish short-term. Gold, neutral on both time frames, and oil, neutral long-term, but bullish short-term. We are moving up the last 4 weeks. Stocks have started to show some profit taking, but the upward momentum is still intact, and so we should be optimistic, but with a little bit of caution in the near term. Now, gold is at a critical point as it is testing that long-term upward trend. Oil is slowly gathering some upward momentum. Fear is low, but there was a little bit of an uptick last week, and so we should be cautious about that. All right, let's move on to the day trade of the week. And this week, I'm going to actually not only show you the day trade of the week with the entry, but also the exit, just to show you one of the exit signals that I look for on stocks that really move quickly. Now, in Active Live, which is my service where you can watch my analysis screen through the day, along with my comments in the opening half an hour. In that service on Friday, ETTX was a stock that I highlighted because it met all of my rules. And again, I have a checklist that I go through, and we're actually working in Active Live to really put a scoring system on that checklist. Well, it met all of our rules right there. It had an action candle. You can see volume was picking up. it was breaking from low volatility, all these different things that I look for. And it went up very quickly, moving from $1.94 to almost $2.30 within the hour. Well, one of the things I look for as a sell signal is something called a bursting bubble. Now, when a stock goes very quickly higher, when it's sort of a parabolic upward trend, this trend line just curves upward like that, that's a parabolic upward trend, and then it hits a new high and closes below its open with very strong volume, that is what I call a bursting bubble. And that's a pretty strong sell signal, a reason to take fast profits. Now, in this case, using that exit signal and using our risk management techniques that I teach in the Active Trader course on Stockscores, we would take a position of 3,330 shares for every $100 of risk that we are willing to take. That meant $6,460 in capital to do this trade. You may or may not have been able to margin this depending on the broker. If you were, it was $2,155 of capital for an $820 gain, which is a 38% return. Now, if you couldn't margin it, it would be more like a 13% return because, of course, you would have to use the entire capital position. But that meant also getting out of that exit signal, because if you held until the close, well, then you were only making 2 RR, or $200 for every $100 of risk taken. And that's why it's important with these stocks that move very quickly higher to watch for things like the bursting bubble candle. It's a great exit signal, and I think it'll help you identify some good exits on those fast-moving stocks. We're seeing lots of them right now in that small cap sector. All right, let's go on to the Stockscores market scan in search of opportunity. So I'm going to jump over to the market scan tool. And this is the tool that we use for longer term trading. So not day trading, not really swing trading, although we can for swing trading, but more for that longer term style of position trading. And in this case, we're analyzing the daily time frame, looking for stocks making the action candle, the abnormal price move with abnormal volume. And then we inspect those charts for stocks breaking from low price volatility. Now, these strategies are something I teach in the investor course on Stockscores. You can learn more about that at the website. But let's just jump into the market scan tool now and actually run a market scan called abnormal breaks, which looks for stocks that are making abnormal moves from low price or from with abnormal volume, We then assess the chart to see if they have abnormal moves out of predictive chart patterns. We're going to run it on the US side. And because the small cap sector is kind of the strong area right now, I'm going to limit this scan to stocks under $15. And I can add in a filter to an existing scan just by adding in that criteria. I'm going to run the market scan. It goes through every stock listed in the US, and it found 33 that meet the criteria. Well, my job now is to inspect the charts of those 33, looking for those abnormal moves from low price volatility, from optimism. Now, this can come in many forms. Let's take a look at this chart first. This is MYCOF. It's a real penny stock, and I know that not all of you are interested in those kinds of stocks, but some are. Well, here you can see that a couple of days ago, earlier this week, it broke a downward trend line from a rising bottom. And notice also that the volume has really increased. So something fundamentally is going on there that has captured investor interest, and that's what caused the stock to break out on Wednesday. I think it's still okay here, but it was really better on Wednesday. As of today, I would give it a 6 out of 10. On Wednesday, it was more like a 6.5 out of 10, which meant I believe it has a 65% chance of moving higher. Here's another stock that recently broke a downward trend line from a rising bottom. Again, it's good. It's not great. It doesn't really have great volume behind it, so I would give that a 6 out of 10. So my process each day, and I typically run the scan about half an hour before the market closes or in the evenings, and I'm just looking for stocks that are breaking from predictive patterns. Now, this stock is making what I call a bottom fishing pattern. A bottom fishing pattern has 3 things I look for. Number 1, a break of a downward trend line. Number 2, the build of a rising bottom, and then a break up from a rising bottom. And notice that this stock did that with very strong volume and very strong price action. Now, it's going to probably run into some resistance up in here, just between $4 and $5. So I would give this a 6.5 out of 10 rating, which means I think it has a 65% chance of working. I do suspect that somewhere in that $4 to $5 range, it's going to hit a little bit of resistance. And so that's why I don't have a 7 out of 10 rating on it. So this is the process. I just cycle through the charts looking for predictive patterns. When I see one, I stop and I do my risk management calculation. Here's one that was pretty good again on Wednesday. This is a break out of a lengthy sideways trading range. It's called an ascending triangle or even a rectangle consolidation pattern. It broke out on Wednesday with some strong volume. So on this time frame, the chart looks good. However, when we see a chart that we like, we should always take a look at the 3-year weekly chart just to see if it's going to face any longer term resistance. And in this case, there is some longer term resistance around $10. So again, that limits the upside a little bit. And so I would give that a 6 out of 10 rating. All right, we're going to go through one more page here, just see if we can find anything that's worthy of a 7 or better. I like to buy the 7s or better. And we don't see them every day, but I do the scan every day, and certainly we can find many good stocks doing this. Now we may as well go through all of them. We'll go through the last 3 here as well. GXGX was a stock that we day traded on Wednesday and later in the week as well. It was very abnormal this week, but I don't love it as a longer term setup, and I don't actually see much else that I like. But anyway, that's a sense of what I do with the market scan tool. And there's different scans. That particular one is for finding position trade candidates on the US market. There's also a Canadian version, and then there's other strategies as well. And all of those rules for the strategies, access to the tool, that's all something you can get from the different trader training courses we have on Stockscores. And you go to the website and take a look at that under the trader training menu. Well, hopefully you've enjoyed this video. If so, please click on that like button, subscribe to the channel, leave a comment. Most importantly, next week, don't trade with FOMO. Trade well instead. Have a good week.